Well, good afternoon, everybody. I'm here to give a guest lecture. Just to introduce myself, my name is Eamon Sheehy. I'm Irish. I do live here in Barbados, and I commute between here and Bahamas, and I'm working for the government in Bahamas. My background is, as you can see, 11 years in the Irish Civil Service in Dublin, working primarily on IT projects related to customs and trade. And then I spent a couple of years at the European Commission in Brussels, and then about 13 years at the World Customs Organization. And you're going to hear a lot more about the World Customs Organization as it relates to international trade and the WTO. But the last 10 years I've been based here in the Caribbean doing various projects as an independent consultant on anything from EPA negotiations between CARIFORUM and the EU, as well as major government IT projects related to trade facilitation. So that's basically my background. What I'm hoping to do today is to give, I don't know how much you guys know about the WTO, how much you know about customs and trade. So if I'm going to hit on anything that you already know, just tell me so we can move on. I'm assuming, based on what Nicole has told me, you've basically started a course in January looking at WTO instruments. What I'm going to try to do today is to put a kind of a concrete foundation on a lot of the policy and let's call it the more esoteric notions of WTO and trade facilitation. So this simple slide here, I'm going to try to relate WTO as an international trade policy relates to the World Customs Organization as a technical body that implements many standards and international best practices for customs and other government agencies, how that relates to national legislation, and how it relates to then regulation, and how that relates then to actual implementation on the ground. So when you want to import a particular commodity, why you have to suffer the way you suffer going through customs, there are rules and regulations that are not necessarily just made up out of the thin air, but actually carried through all the way to international standards and international trade policy. So I'm going to do my best to try to give you, let's say, an overview of this. There's a lot of stuff that one could go into in a lot of detail. Clearly there won't be time to do that today, so it's to give you a flavor and to give you a sense of what this means. I understood from Nicole that there is an interest in goods classification and how that affects international trade. So hopefully I'm going to explain that to you today as well, so you can understand how it impacts trade policy. So when you start to really delve into the WTO trade instruments, you'll see at the core of that is the classification of goods. So as I say, basically try to split this lecture into three parts. International trade policy, so just touching again on WTO, you'll know some of this stuff already, and then I want to go down into the Doha round of negotiations and the output of that, which was basically the Trade Facilitation Agreement, TFA. Then I'm going to give you an overview of the World Customs Organization and how then these two agencies are linked together, although they're independent agencies, how they work together and how the work in one impacts the work in the other. And the second part then is really going into international customs standards, because, well, let's say, as I will explain, the classification of goods, valuation of goods, and origin of goods are all dealt with at the level of the World Customs Organization from a technical standpoint. And then part three is just to look at some of these things in practice on the ground. Just to start off, to say the linkage between the WTO and the WCO. At the WTO you have a Market Access Committee and a Committee for Expansion of Trade on Information Products. Both of them use the WCO HS classification of goods. It's a central core part of their work is just basically looking at goods, classifying goods, and then trying to determine market access on specific goods. The WTO Committee on Rules of Valuation, that is the parent body looking at valuation for customs purposes. So when you import a good, there is a whole slew of mechanisms to determine the value of goods to calculate duties and taxes. I'll go into that in a bit more detail further on. At the WCO, there's a technical committee on valuation, so actually determining the rules for valuation, and it reports to the WTO. The reason for that is because valuation is customs. It's for customs purposes. The WTO Committee on Rules of Origin, also the Technical Committee on Origin is located at the WCO, and it reports to the WTO. And this Committee on Origin has been going on for years and years and years, and they're primarily dealing with rules for non-preferential rules of origin, because it's the easier of the two. There's preferential rules of origin, non-preferential rules of origin. The easy one to tackle, and it's not that easy, is non-preferential. And then, hopefully I'll show you in a bit more detail, this trade facilitation agreement is really based on a whole set of activities at the World Customs Organization, but primarily on what is called the revised Kyoto Convention, which is the Convention on the Simplification and Standardization of Customs Procedures. So there is a significant linkage between the two entities. Okay, I guess you know at least this about the WTO, when it was established and why it was established, and all of these things, I guess, that you'll be looking at in more detail yourselves, dispute settlement and intellectual property rights, etc. That should be intellectual. The most important thing that I want to talk about is the Doha round. The Doha round of trade negotiations, when it started out, they wanted to do everything related to goods. They wanted to tackle the rules for intellectual property rights. They wanted to tackle rules of origin. They wanted to deal with valuation. They wanted to deal with the schedule of goods to give preference for trading, expand all of these goods to reduce the tariff barriers for these goods. They decided to do a huge amount. It went on for years and years and years, and basically got nowhere. In all of that, there was also one topic, which was trade facilitation. And out of all of those discussions, in 2013, one issue finally got an agreement, which was the trade facilitation agreement coming out of the Bali Ministerial Declaration. And the reason why the trade facilitation agreement succeeded was because most of what they put in the agreement is or has already been carried out by customs administrations. When you look at the trade facilitation agreement, first of all, it has a lot of non-specific language. Best endeavors, try to succeed in, based on national legislation, lots of what I would call get-out clauses. There's nothing very specific in it. It's fairly general. If you were also to take the time to look at the Economic Partnership Agreement between CARIFORUM and the EU, there is also a chapter on trade facilitation in there. And it's the same thing. It's very waffly, best endeavors, hope to, sometime in the future. So it's not too specific. It's not a hard and fast rule. It's just an agreement. But as I will show you in over the next couple of slides, the reason why it succeeded, in my view, is because most of the work has or is in the process of being done by customs administrations around the world. So there was nothing really new and nothing contentious. It's already been on the go for quite some years. The reason it's been on the go is because a lot of work has been carried out at the level of the World Customs Organization. And the main convention related to trade facilitation is called the Revised Kyoto Convention. It entered into force in 2006, but it actually was developed back in the late 1990s. I had the possibility to do some work on that convention when I worked at the World Customs Organization. So it was already developed since 1999, but it required a certain number of contracting parties to sign up to it before it entered into force. So even though it entered into force in 2006, a lot of the activities and a lot of the national legislation was already being developed based on the revised Kyoto Convention. So then just to give you then a little, this is not, it's not very good actually. To give you a little bit about the World Customs Organization, it was established in 1952. WCO is based in Brussels. It has currently 180 member countries. I can say the biggest difference between the WCO and the WTO is the membership is made up of customs administrations. So the people who go to the council meetings at the WCO are the heads of customs, the director generals of customs. At the WTO, it's ministers. The WCO, in its convention, it has no really dispute settlement, or there's no binding in any of its conventions. It's all, best endeavors and hope to. It's not like the WTO. You can't take somebody to arbitration or over some issue because there's nothing binding. It's really a technical body to implement international standards for customs. It has a range of conventions, and we're going to look at really only probably 2 conventions and some of the other activities. 2 conventions, revised Kyoto Convention, the Harmonized System Convention, and then the Valuation and Origin. They're the 4 areas. But there's a whole other section dealing with capacity building to assist customs administrations around the world to improve themselves. There's a whole section on enforcement, risk management, all of these other activities that are not directly related to the Trade Facilitation Agreement, although there are some references to it. So, as I said, International Convention on the Harmonized Commodity Description and Coding System since 1988. This is the core thing that I guess we will look at today. International Convention on the Simplification and Harmonization of Customs Procedures. If you were to map that convention against the WTO Trade Facilitation Agreement, you'll see that they mesh directly. And I should say everything I'm telling you here is available in the public domain. There's nothing here that you can't find. And if you're interested in looking at the WTO Trade Facilitation Agreement in more detail and looking at the customs aspects of it, if you go to the World Customs Organization website and you look under topics and you look under trade facilitation and you see WTO, they have a very nice tool in there where it's mapping all of the articles in the WTO agreement against all of the standards and other activities at the WCO. It's a reasonably interesting tool to see both of them together. Temporary admission, Istanbul Convention, mutual administrative assistance, where those who sign up to this convention offer to help each other to improve or to coordinate activities between countries. Going back to 1972, the Container Convention, because believe it or not, containers have an impact on trade and also have an impact on things like determining value of goods. And the containers themselves, you can pay customs duties and taxes on just importing empty containers. So it required a convention when containers became really a central part of the shipment of goods internationally back in the 1970s. And valuation for goods purposes back in 1953, that's now been circumvented by the WTO valuation agreement. This one here, looking at the WTO in 2003, there are a number of articles. I think it's 9 or 10 articles. And for every article that's in the WTO agreement on trade facilitation, there's a direct correlation to something in the WCO revised Kyoto Convention, a standard or a recommended practice. I don't necessarily think I need to go through each of those, but Article 1, publication and availability of information in the general annex of the revised Kyoto Convention, it's covered there. There are also other recommendations and guidelines coming out of the WCO that have been in existence for years. Opportunities for traders to comment before customs legislation goes into force. That's also covered in the General Annex Chapter 1 and General Annex Chapter 9 of the WCO Convention. Advanced rulings. Advanced rulings are important because it allows predictability. If I want to bring in a commodity that has not been brought into the country before, usually what I would do is I would go to customs and say, I need this commodity classified, because that will determine whether I bring the commodity in or not. Because if I classify the good and there's 100% duty on the good, it may be simply too expensive to bring it into the country. I don't want to buy the goods, ship them, and have them arrive at the port and then realize, oh crap, there's 100% duty on this because I thought there was only 10% because I had classified it myself somewhere else. So advanced rulings and the publication of advanced rulings is very important for customs. And again, that is already handled since 1999 in the General Annex of the revised Kyoto Convention. An appeal process for customs, again, covered in the WCO Convention. And all these issues about impartiality, non-discrimination and transparency, again, covered in the General Annex. Article 6, fees and charges, again, covered in the revised Kyoto Convention. And the procedures for the release and clearance of goods, pre-arrival processing, electronic payments, separation of release and the final determination of customs duties, post-clearance audit, which is a big thing for customs. All of these things are covered, again, in the WCO standards and are generally implemented by many countries. Not so much in this region, but in other regions they are. Border agency cooperation, Article 9, movement of goods under customs control, and Article 10, 11, and 12, all of these are covered by the WCO. Now, why then would the WTO write an agreement and call it a trade facilitation agreement when all of this stuff already existed? So I'll give you my take on this, and it's my personal view. It's not an official view. There's two. Well, I can think of one principal reason why the WTO can make this agreement binding on its members. The WCO can't. So even though there are, I forget now, like 70 something contracting, or maybe 100 contracting parties, something, it's in the slide later on, to the revised Kyoto Convention, there's no mechanism at the World Customs Organization to force people to comply. And there's no dispute settlement or anything like this. So if somebody signs the convention and then does not implement what it signed up to, there's nothing the WCO can do about it. On the other hand, the WTO can. The other reason is that you will learn as you look at international organizations that although they do cooperate a lot with each other, they're also in competition. And it's not a real competition, but it's also a competition for resources. So IMF has a customs division doing the same work as the WCO. Inter-American Development Bank has a customs section and customs experts offering training and all kinds of capacity building. And so does the United Nations, and so does the WTO. And part of that, and this is not really directly related to the lecture, but just for your own edification, it's a competition for resources, and it's a competition to stay relevant. The World Customs Organization, when I joined it, was a technical body, but still is a technical body. You develop conventions, you develop recommended practices, you develop guidelines to assist customs administrations to carry out their work in a more efficient and practical manner. It's not really a policy-making body. The WTO is a policy-making body. Now, what has happened is that the WCO tries to get more into international policy, and the WTO tries to get more into international technical assistance and cooperation. Because everybody needs to stay relevant, Everybody needs to keep their job, and everybody needs to, do something. And one of the problems with the WTO is, I don't know if you've thought about this or already discussed this, the Doha round of negotiations, started in 2001. And they came up in 2013 with basically one agreement on trade facilitation. And that's it. That's 12 years of work. So the WTO was also, in my opinion, it was starting to really die on its feet. Nothing was happening, nothing was moving. And this trade facilitation agreement managed to kind of, it came out with a lot of, balloons and people waving, going, look what we've got, look what we've got. But all this stuff existed already and was already been implemented. It's about staying relevant. So you will look at international organizations and you will see them. They're competing all the time, competing with each other, stepping on each other's turf, and not necessarily always giving recognition to what has gone before. So basically to say then, the trade facilitation agreement is really an extension of the activity of the WTO on non-tariff barriers agenda. That's really what it's about. As I said, the international standards and the legal framework for implementing already exists and has existed for years. National legislation in many countries already reflect the revised Kyoto Convention. Even in this region, more and more countries are amending their customs legislation to line it up with the revised Kyoto Convention. Many customs administrations have or are already implementing the requirements in the TFA. And as I said to you, the only difference is the WTO has the capacity to enforce its agreement. The WTO does not. But coming out of the TFA, coming out of all these discussions, was the easiest thing to implement and the least contentious issue, so they could at least say at the end of the Doha round, we've achieved something. And all the indications are now that they're going to kill off the Doha and start with a new round, which would be more focused and taking smaller chunks of issues to deal with rather than what Doha tried to do, which is to take everything. Okay, so looking at international customs standards, I've already mentioned the revised Kyoto Convention quite a few times. It's the core convention for customs administrations, dealing with all of the customs business processes. All of their customs procedures are primarily based around the revised Kyoto Convention. The Harmonized System Convention deals with the coding and the nomenclature of goods, classifies goods, describes goods. Then customs valuation, obviously determining the value of goods when you're importing something or even if you're exporting something for the calculation of duties and taxes. Origin in the past was not that important. I could say with my work in Bahamas, when we wanted to look into the trade statistics, which primarily comes from customs in the Bahamas, everything practically came from the United States of America, because in the country of origin box they just stuck in USA because it didn't make any difference, because there was no preferential agreements, there was no difference. Whether it came from China, UK or the United States of America, you paid the same rates of duties. So basically what they would just do is the last port of call, which was generally Miami, before the stuff arrived in Freeport or arrived in New Providence, that's the country of origin. Now that the EPA has come into force, the Economic Partnership Agreement between the EU and CARIFORUM, which is CARICOM plus Dominican Republic, there's preferential rates. Now there's a reason for putting the correct country of origin in. And already, since it was implemented in the customs tariff in Bahamas, you can already see a difference in trade statistics, because there's a value to putting in, particularly if it's an EU originating good, there's a value for putting it in, because you get a preferential rate of duty, and eventually duty-free, zero rate. So it actually has an impact on trade statistics, origin, as well as when you deal with trade agreements and preferences, it's important. But when we look at origin a little bit later on, it's an absolute minefield to determine the rules of origin. I'm no expert on rules of origin, but when you start to read how they come up with rules and they're still arguing over these things, it's very difficult to determine rules of origin. The other thing I mentioned then at the WCO International Standards is on the area of enforcement, which is risk management and post-audit control. And these are two things that have yet to be really implemented in this region. They are implemented in many other countries. Part of the reason why customs administrations are slow to take up risk management and post-audit control is because of the reliance on customs duties as a major form of revenue for government. Risk management basically means that, in simple terms, when goods come into the country, you won't examine all the goods. You'll release goods without any examination, without looking at any documentation, because you trust the trader or the rates of duty that are high anyway, and people are paying the higher rate and not a low rate of duty. So there's a low risk. And there are systems in place, IT systems in place, that automatically calculate risk for customs. Post-audit control basically means that when you've released the goods from customs control and the goods are in what they call free circulation in the country, at any time after that, a customs administration can come to a company and say, show me your books, show me all your documentation. They'll look at things like invoices, they'll look at your bank accounts that you've paid so much for goods, checking for things like under invoicing or even misclassification, which is a big issue in this region, misclassification. So these are, on the enforcement side of customs, these are two main areas. And then the last area which the WCO has standards on is in the area of capacity building and training and how to teach customs officers and how to improve the workings of and the knowledge of customs officers. The structure of the WCO, just to give you an overview because it relates to things we will talk about a bit later on, and how, particularly if I focus on how goods get classified, how this becomes a classified object. The WCO has a council. Council meets every year, once a year, and the council is made up of the heads of customs, all the director generals of customs. It has a policy commission which gives advice to the council on politically related matters as well as new issues that are coming up. Underneath that then it has a whole set of committees, and these committees meet sometimes once a year, sometimes twice a year, depending on the subject, and they have a particular set of areas that they look at. So the Permanent Technical Committee, it takes care of the revised Kyoto Convention, plus a number of other issues like information technology, standards for customs, etc. The Harmonized System Committee is the committee that determines the classification of goods. And it has a number of working parties underneath it. And this particular subcommittee here, which is very important, called the Scientific Subcommittee, basically these guys look after chemicals and IT-related products, which are very difficult to determine the classification of. And these are usually made up of scientists. They're not necessarily customs officers, but they may come from a national laboratory, for example, and they're scientists who understand the chemical makeup of products and the structure of products. And then you have a technical committee on valuation. It has a focus group on transfer pricing, which is a big issue, under invoicing, all of these kinds of things that go on. Under invoicing is done to reduce the duties that are paid, especially if there's a relationship between the two parties in one country and the importing person. They can under invoice. You can say, well, this costs $5,000, but write me an invoice for $3,000, and I'll pay you in cash, and then I get my invoice and I say to customs, I've paid $3,000 for this, and they'll calculate the duty on $3,000 and not on $5,000. Then you sell your products in the country based on the fact, your markup based on the fact you've paid $5,000, so you get more money. That's simple. And that's what people try to do all the time. And then the Technical Committee on Rules of Origin. So these are the ones that we will kind of look at what they do and how they operate, etc. Okay. Revised Kyoto Convention, it covers all of these issues related to customs. Arrival and departure of the means of transport. You think that, well, it's just a ship that comes. But a ship comes, it comes with stores. For example, food and drink and stuff for the people who are on the ship. That has to be taken into account when the ship arrives. Arrival and departure of goods. You can determine when goods are coming into a country. They could be banned, so you might not want to let them into the country. Very often, at the start of a financial year, the rates of duties change. So depending on when the goods arrive in the jurisdiction, it could have an impact on how much duty the goods will attract. If they arrive at 5 minutes to midnight and they attract 10%, and the following morning or 2 minutes past midnight, they might attract 20%. And people may get their goods declarations in before the goods arrive. So there has to be mechanisms to handle these procedures. Then importation. Importation seems simple. The goods come in, I pay taxes, and I got my goods. But there are variations of importation. You can have importation for home use. It's basically the goods come in, I pay my duties, the goods are staying in the country, and I'm going to sell them in the country. But you also may have situations where you are temporarily importing something, and it's going to go back out again. And it may go back out in the same state it came in, or it may be used as an input to produce something else, which is going to be exported. Customs has to handle that. And there are rules and regulations, primarily because it impacts revenue. If I'm building, let's say, Port Ferdinand up there in St. James, they had to dig out a channel for their big yachts to come into. They almost certainly brought in equipment for that it doesn't exist here in this country. They would have had to go to customs and say, we want to temporarily import this equipment. And this equipment is expensive, so its value is very high. They don't want to pay import duties because it's not staying in the country, it's going to go back out. So there is a mechanism to allow that to be brought in duty-free for a particular period of time and then re-exported in the same state. There are other situations where I bring in raw material and I'm going to use the raw material to manufacture a product. So I will pay duties on the raw material, but when I use that raw material in the product, then I can get a drawback of duty based on the quantity of that raw material I've used in the exported product. That has to be handled. I may also, if you're running a business that, let's say, repairs machine parts, somebody may send you a machine part to be repaired. You don't want to have to pay customs duty on something that's coming in that's going to be repaired and go back out again. So there is a mechanism to handle that. So importation is not just, here come the goods, pay my taxes and off I go. There are variations of importation. In the same manner, there are variations of exportation. I can temporarily export something and re-import it in the same state or in a different state. And that importation and exportation, two sides of the coin, have to be handled in a certain way. And there has to be rules and regulations to govern all of these things. And this is what the revised Kyoto Convention does. It covers all these rules. Transit, okay. Transit is of no real concern for anybody here, unless perhaps you're coming from Belize or Guyana or somewhere like that, where you have borders with other countries. Transit basically is a mechanism to handle goods that are going to pass through a jurisdiction but not stay there. It's a very big thing in Europe because you've got a lot of countries in the European Union. You've got a lot of goods coming across, let's say, from Central Europe, from Hungary, through to Germany or to France or to Holland, and they pass through maybe 3, 4, 5 countries on that journey. And they're allowed to pass through duty-free until they get to the final destination, which is where they pay their taxes. What happens is the goods disappear on the journey, and nobody gets any duties and taxes. It's a huge multi-billion-dollar industry in Europe. Huge. You don't really have it here. You don't have transit here because it's an island and you have no borders. But if anybody in this hall happened to be from Belize or Guyana or Suriname or somewhere like this, you potentially would have transit issues for your goods. Transshipment, again, that's a mechanism for, the example I could give is a major container ship comes to a port, it takes off a container and puts it onto a smaller ship to take it to a country or to take it somewhere else, to another country. So it's not staying in the country, but the goods need to be unloaded in the port and reloaded. Customs have to handle that because you want to make sure it gets off and it gets back on again, intact. So there's a mechanism and standards and rules to govern the movement of goods inside a port. Temporary admission, okay, I mentioned temporary admission as stuff coming in here temporarily and going back out. An example that you could think about is if you're hosting an event here at the university and you had to bring in big speakers or some piece of equipment for the event, and you could only get it out of Trinidad or somewhere like this. You could bring that in under temporary admission. If companies, or if you're having an event where people from abroad are coming to display something, they can bring in their displays stuff, usually duty-free, and they bring them back out again. If they don't bring them back out, then they have to make a customs declaration and pay the duty on it. So there are rules covering this. And then this other one here, inward and outward processing. This is about when you bring in certain raw materials or certain unfinished products, and then you finish them and send them back out again, re-export them. How all of that is handled. Then there's something which I didn't mention in this list, is a thing which I don't think you have here in Barbados, but certainly in Bahamas, is a free zone. A free zone is where you can do all of your activities duty-free. So all of the goods that come in there, very often it's done for manufacturing, for exporting. So it's actually a physical location that is fenced off, and it has factories inside it, and the raw materials come and they go in and they produce something, and the goods come back out and shipped abroad. And all of that, the materials and all of the, maybe even the vehicles and all of the machinery and everything that's inside that zone is duty-free and can be purchased duty-free. There are rules to handle that. And that's a big problem in the Bahamas because in their free zone, you're allowed to purchase motor vehicles. And of course, people buy cars left, right, and center and then sneak them out and put another plate on the car, and you have a duty-free car driving around the country when it's not supposed to be. So that's another loss of revenue for government. So it's a problem. So as I mentioned, this revised Kyoto Convention is the basis for national legislation for customs in many countries. So as I was mentioning, it's 103 contracting parties out of 180 member countries. Now, that doesn't sound a lot, and I can certainly say that there are a lot more countries implementing the standards of the revised Kyoto Convention than there are contracting parties. The reason is simple. There is no benefit to becoming a contracting party, really. All you do when you become a contracting party is make an official statement that we're going to abide by these rules. But as I've mentioned earlier on, there's no mechanism at the WCO to verify that you are abiding by the rules, and there's no dispute settlement. So if me as an importer see that you are a signatory to the convention and you're doing something which is in contravention to the standards laid down, tough. Unless you have the mechanism on the national legislation, there's nothing I can do at the level of WCO. So, and to become a contracting party requires a fairly laborious process. You have to draft documents, you've got to draft a bill that goes to the parliament, that gets debated, and then an act is signed, or you become a contracting party. So to go through all that process can take a long time, and because unlike the WTO, where there's arbitration and there's really controls and binding arbitration, governments take it seriously. Governments won't necessarily take this too seriously because there's no impact, negative or otherwise. So it's really becoming a contracting party is just making a statement to the world, hello, I intend to abide by these rules. But I can certainly say that there are a lot more countries implementing the standards than there are contracting parties. By the way, anybody got a question so far? So either I'm very clear or you're not interested. Oh, one person.
Financial year
Sorry, when?
you were saying that duties will raise or
Every country, the national budget. Chris Sinclair stands up and makes a big statement about how much taxes you'll be all paying next year. That's the start of the financial year. Now, I don't know, I can't recall what it is here. Is it the 1st of April? In Bahamas, it's the 1st of July. So usually what happens, and I say every year, but it can be more often. I know that in Bahamas, they've actually brought in mini budgets halfway through the year and modified rates of duties and stuff like this. A little bit later on, when we get into talking about the national implementation of these things, I'll show you a slide of the tariff schedule from Bahamas. And they have a column which is a variable, it's called a variable rate of up to 300%, because they know that they'll never go beyond 300% duty. But what it allows them to do is to introduce different duty rates without having to go back to Parliament and have a debate and sign the act or the bill for the budget every year. The cabinet can meet and say, oh, okay guys, we need more money, let's increase it by 10%, and they can just do it like that and publish it and say we've increased it. Don't have to go back and have a debate in Parliament and go through all the formal procedure of accepting the act, whatever it is, the financial act for that year. So as I said, I think it's maybe 1st of April here, but in other countries it's 1st of July is the start of the official government financial year. Now, okay, so we're going to start looking at classification and why it's important. First of all, why is it important? Why is the classification of goods important? First of all, it's the basis for paying duties and taxes. And when you look at any tariff schedule and you go through it, there are different rates of duties for different kinds of products. Even within the same groupings of products, there can be different rates of duties. Market access. If you care to look at the Economic Partnership Agreement between CARIFORUM and the European Union, if you look at that, there's actually a schedule of all the goods that will get preferential treatment that have been agreed to. And there's a schedule of the reduction in tariff rates over the years, eventually down to zero for all of the agreed products. But there are some products that are outside the preferential agreement, so they're not impacted by it. In that instance, what can happen, and this is why classification is important, if the goods are similar, and if one classification has zero rate and another classification has 20%, if I'm an importer, what am I going to try to do? I'm going to try and classify it as the one that's got zero rate. So it's very important, it becomes very critical when it comes to economic partnership agreements, because the agreements are based on goods classification. They'll take a grouping of goods and say these tariff lines, these tariff lines, these tariff lines, we agree on these, and here's the reduced rates that we will apply and from when. And everything else will be outside it. So it's important when it comes to market access. And indeed at the level of WTO, you'll see for the agreed lower duty rates, there's a schedule. I think it's called Schedule 1. So when you look at the WTO schedules of goods, it's based on the HS classification, the coding structures. That's what they negotiate around, the classification of the goods. Also, it's used for a mechanism of controls, banned or prohibited goods, endangered species under the CITES Convention, and dual-use goods. Dual-use goods are goods, primarily they're chemicals, but there can be other components that can be used in a normal context or can be used abnormally. Primarily, this is around things like chemical weapons, armaments, stuff like this. Things that can be used, fertilizers, for example. Fertilizer is a potentially dual-use good. You can spread it on the ground to let the grass grow better, or you can use it and manufacture a bomb. It's a dual-use good. So when you're dealing with, on a customs level, when you're dealing with risk, you need to know the goods classification, and you'll say, under these headings, these have a potential dual use, and you'll use that as part of your risk assessment when somebody is importing the goods. Okay, brief history of the classification of goods. Now, you may have you heard of the Harmonized System Convention? You've never heard of it? Okay. Well, in case you had, I thought I need to go back a bit further, because people might think the classification of goods started in 1988 with the WCO HS Convention, but it didn't. It started back as far as the mid-1800s, and certain categories of goods were classified for tax purposes and for trading purposes. And, okay, you see here, just 186 items. Today, there are 5,000 items, plus a bit more than 5,000 items classified. So this particular classification up to 1922, and then as trade expanded, because prior to let's say the 1920s or 30s, the volume of trade between countries was actually quite small and quite limited. And it was primarily limited to these kind of categories of goods. You know, things like some clothing, textiles, gold, silver, some stuff like this. But it was the trade, you know, even when I recall when I was growing up in my own country, before we joined the European Union, we manufactured lots of things internally. Motor vehicles, clothes, shoes, all kinds of stuff. Once we joined the European Union and all the tariff barriers came down, we couldn't compete anymore with Italians and Germans and stuff like this. So we started buying their goods in, and our industries died out, and we started other industries. So up to, you know, the 1920s and 30s, the volume of international trade was relatively low, certainly in comparison to what it is today. So from the 1930s, the League of Nations met to try to improve the classification as trade increased, and basically set up what is now the HS Convention, the structure. So 21 sections, 86 chapters, and 991 headings at the time. Then stuff died out, and it came back in the 1950s because it died out because of the Second World War in Europe. They had more things to be concerned about than just classifying goods, as they were killing one another for about 5 years. And then it started back in the 1950s. They started looking at classification of goods again, and so on until now we have the Standard Convention, which is the Harmonized System Convention, which came into force in 1988. And it has 153 contracting parties out of 180 members of the WCO. But again, there are more countries using the HS classification system than there are contracting parties. And all of this classification takes place under the auspices of the Harmonized System Committee. So the only place where goods are classified is at the WCO under the Harmonized System Committee. And their job is to interpret the legal texts this includes the classification of goods, and it is the only convention at the WCO that has a dispute settlement mechanism. It's the only one. All the other conventions at the WCO don't have it. This one has it because of its importance to trade. It is really the core component for international trade. the core component is the HS classification. They look at amending the legal text on a regular basis, and they also issue classification opinions and binding classification decisions. Just to kind of recap, we saw this slide earlier on. This is the HS committee. They're working parties on the review committee and scientific. These are the ones that do all of the hard work of actually classifying the goods, and then their work gets fed into this committee that reviews the work, and they agree any amendments in the legal text of the convention or in the actual classification of goods. They agree to reclassify or new classifications. They will agree that. They will then make a recommendation to the council, and the council will adopt the modifications and amendments. And then they indicate when these will come into force. Okay, I think we can run along past that. That is just the HS Convention itself. Let's not go into that too much, other than I really wanted to show you two things that we're going to look at: the role of the council and the settlement of disputes. Basically, under the HS Convention, the council is the one that examines all proposals coming from the HS Committee and adopts them. That's basically their role. In the event that there is, under the dispute settlement clause, if they can't arrive or come to an agreement at the HS Committee, they can refer it to the council. And then the heads of customs will negotiate and determine the outcome. Then as Article 10 covers the settlement of disputes, and okay, it just lays out that if there's disputes, what the process is. And the parties agree, those who have signed up to the convention agree that the arbitration, when it comes to an agreement, is binding on them. This is important because I have a couple of examples actually later on to explain why it's important. Classifying goods is very important for market access, because goods may or may not be included as a preferential good under economic agreements between countries. And so and also they may attract certain rates of duties. So if I want to export a commodity to a particular market, I will certainly look at their tariff schedule and look at the rates of duties of similar products. And then I may try to have my product classified at the WCO under a particular heading, because I know either I'll get preferential treatment or I'll get a lower rate of duty. So it's very important for market access. So the HS system itself has 5,000 plus lists of lines of classified goods. It's a 6-digit structure. First 2 digits are the chapter, second 2 digits is the heading, and the next 2 digits is the subheading. Okay, I said to you that the contracting parties was 153, but from my research on WCO now, they're saying over 200 countries and economies use the HS classification system as their coding structure. And 98% of merchandise, trading goods, uses the HS classification. So 98% of world trade, the HS classification system is used in determining what the good is. Okay, that's just basically the documents associated with it. There's a compendium of classification decisions, so you can actually go and see what decisions were made and how the decisions were made and why the decision was made. And I have 1 or 2 examples of that a little bit later on. They're constantly amending the HS. They're putting in some new classifications, taking out some old ones where the goods are now redundant, they don't exist anymore or not traded anymore. But then every 5 years or so, they issue one big amendment. So there's one out now for 2012. The previous one was 2007, which basically means they issue a whole new set of the nomenclature every approximately 5 years. I don't know what customs uses here in Barbados. I think it was up to recently, it was 2007 version, but they may have migrated to 2012 by now. There's always a time lag because it's not necessarily an easy thing to do. What you actually, as a customs organization, what you have to do is you got to take your existing tariff and the new one and go through all the lines and identify where there has been recalibration of groupings, there's new subheadings, etc. And then you have to start applying the rates of duties and discussing what rates apply to what based on the new amendments. That takes a bit of time. And then you have to schedule how you will introduce it into your environment so that the trading community know that from this particular period of time, we're going to have a new tariff, and you used to operate under this particular 6-digit code. Now you'll have to classify your goods under something else. So there's a whole process that needs to be done. You can't just switch it on from day one to day two and expect that it'll operate smoothly, because there can be quite a few changes. There could be maybe 200, 300, or 400 changes in the schedule over a 5-year period. So the current version is 2012, and the next one should 2017, I believe, next one. So this is just to give you an idea of the structure of the HS. Now it's a nomenclature for goods. It classifies goods. It has nothing to do with the tariff. That is something different. I will come to that a little bit later on. This is purely classifying the goods. That's all it does. It's divided up into 21 sections, just giving some samples here. So one section that deals with live animals and animal products. So all kinds of meat, fish, whatever it is, cows, chickens, ducks, whatever it is, comes under this section and is classified under this section. Then the sections are broken down into headings, and the headings are then broken down into subheadings where you are grouping similar products. So each section has a logic to it. It's a general grouping, and then that general grouping is broken down into subgroups, and those groups then are broken down into subgroups again. That's just another example. Section 9, dealing with chemicals and other products that are associated with chemicals. I'll now show you, unfortunately, it's the nature of how the document is produced. It's not, I don't know if you can read it. What can I say? It's how I got it off the internet. This is actually a sample of the HS nomenclature. This is what it looks like when it's published. It has a whole load of notes, explanatory notes, and explanatory notes tell you what is included and what is excluded from this particular section. And then you have a heading, which is chapter and heading, and then you have the subheading down here. It goes to 6 digits. So under the heading, you've got the title here, and under the subheading, it's broken out even further. And that is how the goods are classified. Plain and simple. There's a logic to it. It starts from chapter 01 down to chapter 98. And each chapter then will be broken out into a heading with subheadings. And a subheading might be only 2. It might say A and everything else. Let's see, it's the next one there. So, okay, so that's just the continuation of the first one, 7003, 7004, 7005. So it's just, that's exactly what it does, all the way through, and this is the classification. So if I'm importing a particular good, I will go to 6-digit level, and that is the description of the good. And that is what customs will use to determine the classification of goods. Some countries, particularly in Europe, they actually break down the classification further. They go down to actually 10 digits. for their reason. It's both for the point of view of tariffs, duties, but also for statistical purposes. So don't forget, most of trade statistics, international trade statistics, comes from customs data, and it's based on this. So when somebody talks about volumes of trade and quantities of goods being exchanged between countries, it'll be based on analysis of this, which will be contained in most of the customs systems. If you've got a customs IT system, the heart of the system is the tariff schedule, which includes a nomenclature plus the tariff rates. And it'll be based on this. Now, I will just then talk a little bit about how they come to classify goods. But before I do that, I just for the hell of it, I went into the WCO because I still have access to the members' website, and I took an agenda from the HS committee to just show you what these guys discuss. And they will discuss everything: amendments to the compendium classification decisions, amendments to explanatory notes for a specific heading, and they will then discuss things. I took this one. This is from 2003. And I was just scanning through their thing. I just took this one because you all may know PlayStation 2. Now, you may know it, or maybe you don't. But PlayStation 2 was a big thing when it came out in the early 2000s. In the HS committee, they classified PlayStation 2. They had it classified. And you think, okay, it's a PlayStation. Well, how do you classify it? Because it's when you look at if you ever take the time, you can go onto the WCO website, you can go onto customs websites and have a look at their tariff schedule, which gives the nomenclature, and look at the descriptions. The descriptions are they're not using common language. They won't use PlayStation, or they won't use games console. They may use it as part of a description, but the description is very technical, and it has to be. So when they were discussing how to classify PlayStation 2, the discussion revolved around 3 different headings and 3 different chapters: Chapter 84, Chapter 85, and Chapter 95. And the reason for that is to do with who wanted to classify the goods and why. And it was about market access. So the country whose name I won't call, who manufactures PlayStation, they wanted it to be classified as a computer. Because back then, probably to get into the US market, whatever trade agreements they had back in the early 2000s, they were allowed to export, under a preferential arrangement, computers. So it would make sense to classify the PlayStation as a computer. But somebody else said, no. It's more like a video player or recorder. It's not a computer. It has computer parts in it, but it's not a computer. What's its real function? And of course, then somebody else would say, well, hang on a second now. It's a toy. It's to play as a toy. It's not a computer. It's not recording anything, so it can't be a video. What do people use it for? They use it for a toy. So this was an argument between countries. So you had, I think, if I recall correctly, okay, Japan, they manufacture PlayStation 2, they wanted it here. I think somebody maybe in the European Union or the US wanted this one, and the European Union wanted this one. So they discussed this thing, and they discuss it ad nauseum. And it's not discussed in one session. This might take 3 years or 2 years or whatever it is to discuss. And they will bring in, just to explain to you how they arrive at classification, they will bring in a sample. They will get the documentation from the manufacturer. They will review the documentation. They will take the thing apart. They will bring in experts like IT people. I once had, because I ran when I worked for WCO, as well as working on trade facilitation stuff, I ran the IT department for WCO. And I got a call one day saying, okay, we're trying to classify a CPU in a computer. Can you get us one? So we had to go find a computer, dismantle the computer, take out the motherboard, prise the CPU off it, and go down and hand it in to the guys in the committee, who then passed it around to everybody in the room and had a look at it and, all that kind of stuff. So they engage with the manufacturers. They very often bring the manufacturer in to talk about the product, to show and demonstrate the product, and then they look at the product and look at all the material. They will identify what it's made out of, what is its intended function really. And I recall, I couldn't find the example here, but I recall in the early days when you had a CD player. So you had a CD player to listen to your music on your CD. And then they went and stuck the CD player in a computer. Now what is it? Is it a CD player for playing music? Or is it for recording from a computer? Or is it for loading software into the computer? What is it? So they had to reclassify it, or had to make a distinction between its use as a player and its use in a computer. So they had to discuss this, and all the time they're discussing these things. And the world has become more complex, particularly with information technology products, like your mobile phone. I mean, the mobile phone is not just a phone anymore. You play games on it, you listen to music on it, you watch videos on it, so what is it? So they won't classify it as a phone, they will classify it in some other strange terminology, describing it in a very specific term. And if the function changes slightly, they will reclassify it to something else. Sorry.
Does apart from them asking the manufacturer for advice, does the manufacturer get to tell them which classification they would prefer when they...
No, the manufacturers have they can't go to the HS committee and say, excuse me, what they will do is they will go to their national representative who attends the HS committee, and they will engage with them, because this is also, don't forget, this is also trade policy, because every country wants to export their goods and wants to have foreign exchange come into their country. So the country will always try to defend its manufacturers and help its manufacturers. So the manufacturer may attend the committee as part of a delegation, but the person who will generally speak and the person who will vote is the representative from the government, not the manufacturer. But the manufacturer could be part of the delegation, can answer technical questions, can explain things, but can't just show up themselves and say, hello, I'm here, I've got a product, I want it classified. And I should say, by the way, because I have one or two slides to show on this one, classification decisions can also be made at national level. Commodities that have never been imported to Barbados before can be classified by customs here under the rules of the HS Convention, using the rules of the HS Convention. Now, somebody can dispute that, but ultimately, if they follow the procedures, they can classify goods. So sometimes, it's a product. One example that happens all the time is orange juice. And it's, is it orange juice concentrate or is it orange juice just to drink? There's a difference. And there's a difference in the nomenclature and the classification. And it describes, there was another one recently, what was it? Chicken. Frozen chicken. Frozen chicken. Frozen chicken, salted, and frozen chicken are not the same classification. And they don't carry necessarily the same rates of duty, different rates of duty. And they will describe the salt, how many parts of salt used in the manufacturing process, for example. It will go down to that detail. If you were to read the nomenclature, it will go down to that level of detail. So, saying, oh, it's a frozen chicken. Well, yes, it's a frozen chicken, but is there salt used in preparing the chicken and then packaging it? If yes, it's a different classification. Orange juice concentrate, when you get orange juice concentrate, you don't drink it. You pour a piece of it into a glass and you add water. Orange juice already has the water added to it. So it'll describe how many parts of water or the concentration of the orange juice must be at a certain percentage, and then it'll be classified under that particular commodity. And there are many occasions where people try to misclassify their products in order to get them into the country with a reduced rate. So it is a very technical subject matter. And the people who do it are experts in classification. They're not just any old customs officer you see wandering around down by the harbour. These are guys who have to be trained and go on extensive training and have to not necessarily to be an expert in information technology, but also an expert in how to think and what questions to ask and how to dissect what it is. But you will have people in customs administrations who are subject matter experts. So you might have a customs guy whose job is to be an expert in information technology products. Somebody else will be an expert in chemical products. And usually the state laboratories, if there's a state laboratory, their scientists will be involved in classifying and assisting classification of goods. So, but at the national level, goods which may already be classified can receive a classification from the national customs. And in Europe, the way it's organized in Europe, because of the European Union, it's 25 member countries, if one customs administration makes a classification decision, it's binding on all the members. The reason for that is to prevent people choosing the country they want to bring their goods into. So the European Union is a special kind of animal, because once you get your goods into the first country in the European Union, it's in free circulation. You can move the goods around anywhere you want. There are no more internal borders, there are no more customs duties, there are no more. So what used to happen is somebody would say, I'm going to bring in this commodity. They'd look around the countries and they'd say, okay, how will you classify my goods? And they'd classify it this way and it'll attract a certain rate of duty. Then they go to another country, ask them, how you classify this particular product? Oh, we classify it this way, and now it has a reduced rate of duty. Okay, I ship all my goods in here. And once they're in, I'm actually going to bring them to the country I wanted to bring them to in the first place, but now I've paid a lot less duty. I got a more favourable classification. So in order to avoid that, they brought in this thing where the first country that classifies the goods, it's binding on everybody else. This is just an example of an official ruling done at the WCO, World Customs Organization. This is the description. Now, you see from this description, it's not 61 LEDs or 63 LEDs, it's 62 LEDs. That is the description. So if the product has not got 62 LEDs in it, then it won't be classified under that heading. So, and you see the dimensions, 444 millimeters length and 5 millimeters wide. If it doesn't conform to this, it won't be classified under that. It'll be classified under something else. Another subheading, but not that. So it is specific, very, very specific. They try to be very specific. And this is an official ruling on this particular product. So this product, wherever it appears now in the world, will be classified under this, and not under these other ones that were part of the discussion. So the ruling is being made. And these general interpretive rules, these are the 6 rules that guide those who are analysing it to choose. Sorry, go ahead.
So that's the description. That wouldn't be something for the average man to read.
No.
Because I'm looking at it, I'm like, I don't know what it is.
No,
So is it just for the committee?
it's for customs.
A customs officer?
It's, yeah, so when you bring whatever that thing is, I mean, it'd be good if I could get a photograph of it, but I couldn't find a photograph of it. Whatever that is, if it's imported, then this is the formal description of it. So when you take out, so if you want, because this is part of a backlit unit for LCD TV, so if you are manufacturing TVs and you're bringing this component in, it has to conform to that description. That's the description that customs will use. You can call it whatever you want. I call this a computer. The word computer does not exist in the HS classification. There is another description which is more precise and specific using different words. The word computer does not exist. Motor car, it doesn't exist in the HS. So there are lots of everyday words that you would use to describe something. They don't exist. They're described differently. So if you were to go in to search the HS and you said, okay, I'm going to look for a computer, or I'm going to look for a cup, you probably won't find it. It'll be described in a different way. Now, there are tools out there that are commercially available that, and they're quite complex tools where they use all kinds of trade names and natural language descriptions, and it maps against these descriptions. So you can use the tool to drill down to get the correct classification based on common language use. But you won't find common language use in the HS. It's very, very specific. This is just another example. You can probably pass by reasonably quickly. This was classifying a lid on a container, a lid. And this classification just happened to be made in Ireland, and it's binding on the rest of the EU because they made the decision. Okay, you can read that yourselves if you feel like reading it. And you can tell me if you can make any sense out of it. That is the official description of that product, of the lid. What you and me would call a lid. Oh, that's a lid. No, it's not. That's what it is. So the level of, preciseness is there because the international trade, because all the products that are traded, especially on a preferential level, they are all using the 6-digit HS code. And 6-digit HS code describes these. And if your product does not fit in to that classification, then your product is outside the preferential treatment. And this is big business. So everybody is trying to get their goods classified, or trying to get, and you're also on the other side of the coin protecting certain industries. So for example, foodstuffs. You might not object to the importation of beef, but you might certainly not want chicken, or you might not want a certain type of chicken or something to be imported, because you will, if you do it, it could adversely affect your local industry. So let's say, we've got lots of chicken farmers here in Barbados. If suddenly the duty rates on chicken, or chicken was to get preferential treatment in some agreement you had with other countries, and the market got flooded with chicken because they have just got a huge scale of production, you could wipe out the local chicken industry. So it's also used, what is outside an agreement on the tariff level, on the classification level, is as important as what is inside, because it's also about protecting certain industries as well as getting preferential access to markets. There's two sides of the coin.
So we've been having this discussion in terms of why the Caribbean doesn't export goods to other countries. Would this be a challenge? Because I've never heard anybody describe it in this manner, meaning that nobody says, I'm going to manufacture a good to the specification of the 6-digit code to import that reaches the preferential code. They say, I want to manufacture a car.
Yeah.
But then when you manufacture a car and you don't understand the specifications, then it's no wonder you're not going to get any preferential treatment, you're going to get blocked. Has that been a challenge you've seen in Caribbean companies?
No, I wouldn't say so. I mean, because, okay, I think if you're going to manufacture something, you're definitely doing it for a business reason, which is to sell that product. I'm sure that you might not necessarily think at the start of your production process, let me think about the classification in customs terms now, because, but clearly there are some companies that do, like the example of the PlayStation 2. When that started to be manufactured, clearly there was an issue about the classification early on. It is an issue, but it's not necessarily a driver for making a business decision. I'm not going to manufacture if I don't get this classification, unless you decided that you saw a niche in a gap in a market in that country, and then you wanted to manufacture this product, but you needed to make sure it got in some kind of classification, then you might take it into account. But generally, I have to say, there are far more fundamental problems with companies in the Caribbean than classification, in my opinion. So that's just to give you an example of how goods are described and how the classification of goods has a major impact on the trading environment. So when you're looking in the future at your WTO articles and you start looking at the schedule of goods that are, IT products and stuff like this, maybe you'll reflect back on this and you understand actually this is how they describe the goods, and it's a very precise thing, and it's actually quite an important central force on international trade. And I'm going to mention something here to you, which I'm not going to go into any detail, principally because I don't know all the information about it. I do know the people that were involved with this, and I think it's an excellent case study on the importance of classification. And I guess you'd all appreciate it because it's about rum. And this classification fight, if it had not been won, had the potential to destroy the Caribbean rum industry, to destroy it. And it's an interesting case study. So if you want to take up this as a kind of a case study to look at, because it's a WTO case study as well as being a classification, and the reasons behind it. It's around 2003 it started, the issue started. And basically, not knowing all the detail of it, the Brazilian government issued a presidential decree saying this is how we're going to classify their drink called cachaça. And I'll just jump forward the slide in case you don't know what cachaça is. That is the description of cachaça. Basically, it's a drink, an alcoholic drink made from sugar cane, same as rum. But it's classified under the same heading as rum, but a different subheading. Now, and this decision, because I also just want to point out the number of brands and the quantity that they can produce. I don't know what the quantity production of rum in this region is, but it's not close to that by a long shot. So they wanted to create a new subheading and a separate classification, because my understanding is because then it's a new subheading, it's outside the schedule of goods that are that had been predetermined under the WTO agreement. Therefore, it could get market access because it's a new heading, so it's not on the list. And by default, then it could get a market access to the EU or to the US, which basically means that it would be competing as is a similar product with Caribbean rum. And they could probably sell it much cheaper because they can produce in huge volumes. So it was a very serious matter for the Caribbean rum industry, very serious. It could have had a long-term negative impact on that industry in the region. Could have destroyed it. The organization that took up the case for rum is the West Indies Rum and Spirits Association. And it was actually their people who went to, as it turned out, because it's based here in Barbados, went to Customs in Barbados, went to the embassy in Brussels and got somebody from the embassy in Brussels to go as a delegate to the WCO HS committee to argue against the Brazilian delegation as to why it should not be a new classification, and that the existing classification should be used with a modification to the text, which meant it was still an existing classification and not a new one. And ultimately, that is what happened. The Barbados government officials won the day for the Caribbean rum industry by arguing their case at the WCO and providing reasons why it was incorrect to have a new subheading. But it's a very interesting case study to go into in more detail simply because there's a Caribbean element to it and a major industry was impacted on it. Let's see, where are we going now? Okay, so I'm going to jump quickly on to, so most of this was about classification. I'm just going to touch on valuation and origin, okay? And then at the very end of it then, I'll just show you some screenshots of the implementation of these three things, the HS, classification, the valuation, and the origin on a practical level, so you get an sense of it. Okay, so the valuation agreement lays out the principles for international system of valuation. I'll just jump forward here because make it faster. There are actually 6 defined methods to coming up with customs valuation. So this is nothing to do with when I go to the shop and it costs $10 to buy that. That's not the value. That's a different value to the customs value. The customs value relates to the basis on which you'll charge the duties and taxes. And like everybody, normally, nobody likes to pay taxes, so you'll try your best to undervalue your goods to reduce your rates. And this actually is a problem for, let's call it, developing economies like the economies in this region because of the amount of fraud, undervaluation fraud. However, because the countries are most of the countries, except for Bahamas, belong to the WTO, you have to use the WTO valuation methods. And the primary method is transaction value, which is basically the invoice value plus some additional charges. That is the primary source. And that causes a problem for developing countries because it's very difficult. You don't have the resources necessarily to investigate, is that the real invoice value? And when you try then to engage other countries to get assistance on this thing, particularly the United States of America, I have to say, they will not give you commercial information because it's not in their interest. They're only interested in exporting. So they're not necessarily interested in your duties. So getting that level of information to come to a conclusion, is this the real value or not, is quite difficult. So for the transaction method, it's basically the price you've paid for the goods plus some other adjustments. Let's say freight cost, let's see, what else would it be? Any insurance costs and stuff like this. These kind of standard costs that basically, when you arrive in a country, everything that you have paid for, including the physical price you pay for the good, all of that is part of the value of the good. Because you've paid all of these costs to get the goods to the country. The big issue here is buyer and seller is not related. Because if I'm a subsidiary of a company abroad and I sell my goods, I can easily undervalue the goods and say, well, you're going to pay for that because it's all inside the one company. You're not going to lose any money, but you're going to reduce your duty rates, that you have to pay. Related parties is concerning with a person that might be in 2 companies that are trading with each other, can impact the determination of the invoice value or manipulate the value. But this transaction value is the primary mechanism for determining value used. The other methods are used as kind of backup. So if you can't determine, if the invoice doesn't look right, if there's a sense of there's something wrong here, you can, as a customs organization, go to method 2 or method 3 or method 4 or method 5. You can, but that's the order you have to do it in. So this method 1, the reason why there's 1, 2, 3, 4, it's not because there's 6 lines there. This is the first method you must use. If there's a problem with that, you can then go to the second method. If there's a problem with that, you can then go to the third method, and so on. You can't start off down here. You can't start off in there. the first point of contact for determining value is transaction value. That is the order you have to go in. That is the rule at the WTO rule. So the second method is transaction value of identical goods. So if I'm importing this computer and I say that's $300, and you're thinking, well, hell no, I mean, a Mac is not $300, that can't be right. Somebody else has imported the same Mac at a different time, and on their invoice it's $1,000 from the same country, or maybe from the same company. So you can then say, method 2, same goods coming from the same country. If method 2 can't be determined because you can't identify somebody else who's brought in the same good, you can then go to method 3, where it says goods closely resembling. It might not be this one, it might be another one that's very similar to it. So then you can use that method if the first 2 methods can't be determined for use. Deductive value, okay, this is a bit more complicated. Now you're starting to look at the components and you're starting to look at how it's made up, and you take each of the components, and from that you can deduct the value of the goods. It's a bit more involved, it's a bit more complicated, and generally has not been used to my knowledge. And this other one, again, computing the value based on the cost of production, on the amount of profit generated and the expense used. So this is much more in detail, that again, it's only a fallback position as last resort. Well, last resort, fallback position. This one is a kind of a catch-all. This one, I reckon, will never be used, but when they come to writing international agreements, you have to cover all the bases, and you need something as a last resort. If all else fails, what do you do? But you should never get to this one. Really, the first one is probably 90% used, and method number 2 is the remainder, primarily. Okay, origin. Rules of origin, the national source of a product. Now, rules of origin are used to implement commercial policy, anti-dumping, safeguard measures. So I've already kind of touched on that before, and I spoke about the chicken coming into the country, safeguarding your own local industry. And you have anti-dumping, where you can put extra duties on a product if you believe that they're being imported under value. So some countries, China is usually the example they give, because it has a huge manufacturing capacity. It can sell, it'll try to get in, to penetrate a market, it may sell the goods below the actual value, just to get into the market. So if that is determined that is the case, you can add additional duties onto the product, because they're now trying to dump their products onto your market. So rules of origin are used to determine these things. Also to determine the preferential treatment. So the example is the Economic Partnership Agreement here. There's a schedule of tariff codes and that are listed, and the duty rates apply to those, and those duty rates will diminish over a number of years. And then, okay, the other 2, government procurement and labelling, that's nothing big there. As I mentioned at the start of the lecture, primarily the focus is on non-preferential rules of origin. The rules have been written for that. The reason for that is because they're easier, because you're not looking to give a preferential treatment to the goods. So it's just, these are the rules to determine the origin of goods, regardless of preference. And the World Customs Organization revised Kyoto Convention that we were talking about, that is the originating basis for the rules of origin for non-preferential trade. And I really don't have time really to show this, unfortunately, but there is a booklet, a small booklet published on the EPA which is available on the CARICOM website that deals with origin under the EPA. And there are 3 examples worth looking at so you can understand how they determine the rules of origin. And it's trying to identify last substantial transformation. What I obviously want to avoid is I buy a good from country A and I bring it into country B and I let it sit in the country for 6 months and then I export it to another country under an economic partnership agreement, and you're now saying that good originated in that country. It didn't. So something has to happen. For the good to have origin, the good has to be wholly manufactured in the country, or the use of raw materials, but there's been a substantial transformation when you take those raw materials to produce something completely different, which usually entails going back again to the HS classification, usually entails a change in the classification. So if you want to look at what you mean by substantial transformation, means usually there's a change in the classification of the goods. So I have 3 pieces of raw material, I bring them together, I manufacture something completely different, there'll be a change in classification, and that, if that is substantial enough, then you could say that good has origin status in that country. And I believe there's something, if you take a particular product or kind of a raw material, it has to have a minimum of 2 manufacturing processes applied to it before you could say it is transformed. So let's say a meat product, for example. You have to take the meat product. Now you may reissue it as a similar product to the raw material, but you've done something to it. And it has had to take at least 2 processing steps. Then you could say that that has added value and it has substantially transformed the raw material, so that product is now originating in that country. So originating rules for origin are very important when it comes to economic partnership agreements. Very important, because it is those origin rules that allow you the preferential market access for your goods, if they're included as part of the package of goods. Okay, just quickly, because we are going to run out of time shortly, to go through all of what I've spoken about, how it's implemented on the ground. All customs administrations have a tariff schedule. Tariff schedule is made up of simply 2 things. It's made up of the nomenclature, which comes from the World Customs HS system, the 6 digits, a minimum of 6 digits, but it can be more. It could be 8 digits. Some countries in the Caribbean have 8 digits for maybe statistical purposes or duty purposes. Other countries in the European Union, as I mentioned, have up to 10 digits and more. So there's 2 things. There's the classification of the goods, and then there's the duty rates that are applied to those goods. And that is the National Customs Tariff Schedule. So if you want to import a product, you go down to Bridgetown Port, the customs officer will use the 6-digit code to classify your goods and then apply the duties associated with that 6 digits in the tariff schedule. So that's basically how customs calculate their duties using the tariff schedule. Just then to say on the tariff schedule in general, there are different taxes. It's not all just customs duties. So you have import duties, standard import duties, excise taxes usually for these particular products, because the excise tax can be charged internally in the country. It's managed by customs, but it's an internal tax. Environmental levy, usually maybe a processing fee for processing the actual declaration, and then adding value-added tax. And there's 2, let's say, applicable methods for calculating. What's called ad valorem, which is basically a percentage, 5%, 10% of the customs value. And then there's a specific rate, which is an amount, let's say $10 per item or $10 per kilo. It's a fixed amount per something. It's not a percentage, it's a fixed amount. It has no bearing on the value, because it's, let's say, $10 per unit of computer. and you don't care if the computer costs $20,000 or $500. It has no bearing. This one has no bearing. This one obviously has a bearing because it's a percentage of the customs value. And here is an example of a national tariff. I think this one might be St. Kitts and Nevis. I just did some searching on Google and found.
Could you just say, what does excise
They're just, it's another tax on particular products, because the difference is when you go to the pump and you buy your petrol, part of the price, there's an excise amount which goes to government. It's embedded in the cost. Usually when you have import duty, you know the value of the good and then you add the import duties to it. These are just, you can put excise taxes on anything. It just so happens that these are the kinds of products, because of the nature of consumption, it's just another means of getting the tax revenue. And it's usually applied as an ad valorem, like a percentage, 20%, 10%. But it can also be, like in tobacco products, it can be a percentage, ad valorem, and a specific. So per pack of cigarettes, you might charge excise tax of 50 cents and 300% duties on that, for example. It can be one or the other or both, depending on the product. It's just another tax, but it's not an import tax. If you were to manufacture rum, you manufacture rum here in Barbados, you have to pay excise duties on the rum, even though it's manufactured here. So the excise tax is included in the price you pay at the shop. Import duties are only for goods coming from abroad that you bring into the country, you pay at the point of entry in the country. VAT, well, VAT is everywhere. You pay VAT on what is called the landed cost of goods at import. So if you charge VAT at import, it's on what is termed the landed cost, which is the value plus import duties. You add the VAT. The VAT is calculated on the value of the product plus the import duties.
That's when that is the value plus the
No, when you would say, I want to charge 10% VAT on this imported object, the value that you will calculate the VAT against is the customs value plus the import duties paid. And then after you've added them together, you calculate the VAT. So as I said, this is a typical tariff schedule from a customs administration. And again, you see, okay, they're broken out theirs by an extra 2 digits. You've got the 6 digits and you've got +2. But the descriptions here are exactly the same as the WCO HS. There's no difference. The only difference is when you break it to a lower level here, they may add to the description because it doesn't exist it's broken out of the 6-digit level.
Okay.
Sorry.
That one. So, with this being one, so this is one that customs will use when they're.
I pulled this off the St. Kitts and Nevis Customs website.
Because it has language I understand. Compared to that other one.
Yeah, well, it may be the public one, so you can understand. But if you were to go to the actual customs one, they have to use the WCO HS descriptions. If they were classifying the goods, they'd have to use it. They wouldn't classify the goods based on some of these languages. But some of the languages you'll understand. For these kinds of products, you will see this kind of language, poultry of heading, or you'll see some of those. Some of the things are common for animals. It's when you get into the more technical products, it becomes much more complicated. And this, as I mentioned, I was talking about the excise tax, cigars, cheroots, cigarillos, blah, blah, cigars, 50 cents per cigar and 220% on the value. So you can have one or both. That's how they calculate. And this is, so you understand, it's not customs that determines these rates. It's the government. It's the Ministry of Finance. Customs is just an implementation arm. It's not a policy-making body. So customs don't come up with, 10%. That'll be the Minister of Finance and the government who will determine the rates of duties. This is just to show you, I mentioned about the Economic Partnership Agreement on a number of occasions. This is a schedule for the Economic Partnership Agreement. And I just arbitrarily picked this one. What is it now? This, I think, is fish. Chapter 3 is fish. So you see these headings here. None of the products under those headings here are included in the agreement. And I don't know the reason for it, but I'm assuming it has to do with safeguarding local industries. Certain kinds of fish that are maybe popular here might negatively impact the fishing industry if they were included. But the breakout then of all of these other ones, you'll see in 2011 the duty rate was 23%, in 2013 20%, 2015 18, next year or 2017 is going to be 15%, and so on till it gets down to zero. That's the agreement between CARIFORM countries and the European Union for EPA. And that schedule, you can find the schedule that covers all kinds of products, and that's exactly how it's laid out. You can see the different rates of duties, which means when I fill out, as an importer, I fill out a customs declaration, and I put in this tariff code here, I can determine the origin of the goods. If they come from the United States of America or somewhere else, I'm probably going to be paying 23%. If it comes from an EU country, I'm going to be paying 18% or 15%. So that's where origin becomes important. And then to determine the origin. And people will try to claim origin that is not valid. Anywhere where there's a difference in the rates of duties to the same goods or similar goods, people will always try to misclassify or change the origin or to undervalue. These three things they all affect the revenue, and they're things that people or importers will try all the time to misclassify, undervalue, or change the origin status. And this is a rate, this is the tariff schedule from Bahamas. And you see, okay, they have identified all of the products that have an EPA rate associated with it. And this is the standard rate. And then there will be an EPA rate. And this one here happens to be based on weight per pound, 35% based on based on the weight of the product. So talking about origin quickly, certificate of origin. To determine the origin of a product that's been brought into the country, usually it's determined based on a certificate of origin. Certificates of origins are issued by a competent authority. Most of the certificates of origin in Barbados that are issued for products that Barbados companies will export is issued by the BIDC. I think there's one that is issued by customs, which is the EPA agreement. It's called a movement certificate. It's the customs department that issues that origin certificate. But all the other ones are issued by the BIDC. So you get a form with a classification, description of the goods, information, and it's stamped, and that goes with the goods. And when the customs in the importing country get the documentation, they need to see the certificate of origin if you're claiming preferential treatment. If you're not, generally it doesn't really matter. These are just all of the different, so there's not one certificate of origin covering everything. There's one per agreement. So it might differ, the information requirements may differ slightly. You can't read that, but this is a certificate of origin, EUR. This is the EUR1 for EPA. So who the exporter is, who the importer is, means of transport, issued by which competent authority, and then you have the number, the marks on packages, origin criterion, a description of why, the weights, numbers, etc., and then stamp certification. And that goes with the goods. And that's just, this is another one, just how it looks if it's stamped. Any questions? Did you learn something? Very good. I'm happy to hear that. Well, thank you very much for your attention anyway. Have a good afternoon.